Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news. Russia has a new brutal ploy in their invasion of Ukraine. It says civilians can flee, but only towards Russia, otherwise they'll be bombed. Virtually no one is taking up the offer, and the rush west is continuing despite the risks and threats. And commodity prices keep on rising. Hard commodities like nickel and tin show no signs of topping out. Iron ore is on the move up again too. Wheat is the same. Your guess about where consumer prices and inflation are headed are about as good or bad as what professional analysts can muster. The speed of change and its pervasiveness of it is altogether unprecedented. Some analysts are saying this is the time for central banks to step up and to do their job by pushing back more aggressively against inflation now. And there is certainly going to be much higher inflation, and it is hard to see any economic expansion in the near future though. The result will likely be a long period of stagflation at best, if we can avoid recession. And late yesterday, China reported quite strong export sales for the first 2 months of 2022. Exports are up 16.3% and imports are up 15.5% from the same period a year ago, although to be fair, the year ago base was softer than usual. Impressively, their trade surplus swelled to $116 billion for the period, up from $97 billion from the same 2021 period. Trade with the booming US economy helped a lot there. Meanwhile, China's foreign exchange reserves slipped slightly, a surprise because they were expected to rise slightly. And events have overtaken the mood in Germany, but we should note that in January, German retail sales were on the mend in an impressive way, up more than 10% from the same month a year ago. However, subsequent gains may be more to do with panic buying in the face of security concerns rather than the healing economic outlook there. And updated Aussie data released yesterday was quite impressive. Their services PMI rose to a level that indicates a sharp expansion in that sector, and it's a 9-month high and a strong expansion in any country. Their job ad levels rose as well, up to a 14-year high. Despite this good data, investors are retreating in their financial markets. And the US Treasury 10-year yield opens today at 1.73% and up 1 basis point from this time yesterday. And the price of gold starts today at $1,979 and up another $6 from this time yesterday. But it has been quite volatile in between, topping $2,000 briefly and then retracing. And oil prices are higher today by about $3 a barrel, no retracing here. In the US, they're now just under $113.50 a barrel, and the international price is just on $121 a barrel. And the Kiwi dollar will open today a quarter cent lower at 68.3 US cents. Against the Australian dollar at 93.2 Australian cents and firmer. Against the euro at 62.8 euro cents and unchanged from this time yesterday, although it got a lot higher temporarily in between. That all means our trade weight index starts today at just on 73.6 and little net change from this time yesterday. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.